Hello and welcome to This Week in Markets. Indian equities have now logged a sixth straight weekly decline, but this week felt very different from the last. It was a truncated trading week with two market holidays which kept volumes lighter and made moves look sharper. The week began on a relatively stable note, but sentiment quickly turned fragile as tensions in West Asia escalated again. On April 2nd, markets were jolted after US President Donald Trump warned of possible intensified strikes on Iran over the next 2-3 weeks without offering any real clarity on how the conflict might de-escalate. That triggered a steep intraday sell-off, with the Sensex falling over 1500 points and the Nifty dropping more than 500 points in early trade. But unlike last week, the market did not spiral lower. Instead, it staged a strong recovery through the session, helped by value buying and a decisive intervention by the Reserve Bank of India to stabilize the rupee. The RBI tightened rules around rupee derivatives and capped banks' net open forex positions, helping the rupee rebound sharply and limiting the downside for equities. For the week, the headline damage remained limited. The Sensex declined 0.4% to close at 73,319, while the Nifty slipped 0.5% to 22,713, marking the sixth straight weekly loss for both benchmarks. Foreign institutional investors remained net sellers, pulling out roughly 24,500 crore rupees during the week, while DIAs absorbed much of the pressure with net buying of over 22,000 crore rupees. Nifty IT rose almost 3% for the week, likely helped by rupee movement and relative defensiveness. Nifty Metal also saw strong gains, up 2.6%, making it another standout pocket of strength. On the other hand, Nifty Healthcare fell 3.4% during the week. Nifty Bank declined 1.4% and Nifty Auto slipped over 1%, even though March auto sales data remained broadly supportive. Among the top gainers on the Nifty, Hindalco Industries led with a 5.7% rise, followed by Trent, Bharat Electronics, Tech Mahindra and Adani Ports. On the losing side, HDFC Life Insurance was the biggest drag, down 7.2%, followed by Sun Pharma, Dr. Reddy's, NTPC and Cipla. Beneath the volatility, domestic macro signals still looked reasonably firm. India's industrial output for February rose 5.2% year-on-year, slightly above the previous month, indicating a gradual improvement in activity. Auto sales data for March showed demand held up fairly well across segments, particularly in PVs and two-wheelers. And bank credit growth remained above 14% year-on-year, pointing to continued underlying momentum in the economy despite global uncertainty. US bond yields stayed elevated, Brent crude remained above the $100 per barrel mark, and the trajectory of West Asia conflict continues to dominate sentiment. Next week, markets are heading into an event-heavy calendar with the RBI policy decision, US FOMC minutes, US GDP data and US inflation numbers all lined up. The March quarter earnings season will also begin with TCS, Anand Rathi Wealth and GM Brewery scheduled to report results next week. From a technical perspective, the market is still at a critical inflection point. The 22,900 to 23,000 zone on the Nifty remains a key resistance band. A sustained move above that could open door for a pullback toward 23,300 and then 23,500. On the downside, the 22,400 to 22,350 zone remains immediate support. A decisive break below that would suggest the downtrend is resuming, with the next downside levels around 22,200 and potentially 22,000. That's a wrap for this week. Do you think the market is beginning to form a base here, or is this just a pause before the next leg down? Let us know your views in the comments below.